Welcome to this OCS highlights video. If you're preparing for your operational case study exam, then this is the perfect video for you. You might be wondering what you need to do between now and the exam date. Well, the best place to start is by gaining a thorough understanding of the pre-seen company. And in this video, we'll be showing you some of the highlights from the Astranti pre-seen analysis pack. And these highlights will give you a good overview of the pre-seen and should serve as a solid basis for your preparation over the next few weeks.
So in this video, we'll be showing you clips from 5 different videos from our pre-seen analysis pack. And the first clip is from the pre-seen analysis series. It's vital that you fully analyze your pre-seen, and this requires a detailed examination of the case study, ensuring that every section is fully understood. So our pre-seen analysis video provides a page-by-page analysis of every section of the pre-seen, and it ensures you don't miss anything important, and it helps you to build a comprehensive understanding of the material. And this is vital if you're going to gain high marks in the exam. So in this clip, we've taken a section from our pre-seen analysis video series.
Okay, so that's your role. Let's get on and let's start to look at the company in the introduction. So Kanann is the name of the company, and it's a company that designs, makes and sells saddles for horse riding. Okay, so we can get an idea already of the type of company we're dealing with. A company that makes horse saddles for horse riding. That's a very particular industry, and we'll be learning about that as we go through. And they design, they manufacture, they'll be into selling and marketing. We'll see the sales channels later on. Distribution of those saddles to their customers and to end consumers. So Kanann only makes saddles. It does not make bridles. Okay, so as we get further into the pre-seen, we'll see different business models, and in the industry analysis, you'll learn about different competitors and how they operate on different business models. So what we have here is a company that only makes saddles. So there is a risk here of overdependence on a single product line. But obviously with that risk comes the opportunity of expansion and expanding the product line to more than just saddles. Companies such as Kanann are known as saddle makers. So they're really just focused on the one market. So all of the trends and dynamics that they need to be aware of are going to be specific to the saddle market at this stage. Obviously, if they expand beyond that, that's a possible exam scenario that will need to be factored in. But at the moment, it's very much specific and focused on just the one market. The company is based in Kanann, the fictitious country. Obviously doesn't exist in the real world, but it does exist in mainland Europe. So there's a real world element to this, and we can understand real world research and do real world research on this market in Europe. And that might help us with a broader industry understanding and help us provide better answers. And it has the K dollar as its currency. Okay, so operating in Europe, exchange rates and regional economic conditions, these could significantly impact Kanann's business. So for instance, currency fluctuations might affect import costs for materials or export competitiveness. So based in Kanann, based in Europe, we'll see later on that they are involved in Europe more broadly. Okay, so Kanann was founded in 1906, so it's a well-established company, been around for over 100 years, by William Kanann. Okay, so for a company that's been around this long, that will speak to the company's long-standing heritage and potentially its brand reputation in the market. William started his working life as an apprentice saddler, and after completing his apprenticeship at a local company, started his own business making saddles for the Keeland Army. Okay, so this implies that the company was built on solid craftsmanship skills, and that might still influence its culture and its product quality. Okay, so William purchased a site on the outskirts of his local town and built a workshop, and the company remains on this original site, but it has expanded over the years to incorporate a production facility, inventory warehouses, and offices. Okay, so we've seen expansion over the years, and the nature and extent of this infrastructure, the production facility and the warehouses and offices, that can have can impact various strategic considerations, and that includes production capacity, inventory management, and operational efficiency. So during the 20s and 30s, the customer base widened to include civilian customers and customers in other European countries. And during this time, the company became known for its high quality and stylish saddles. Okay, so that customer base widening to include civilian customers, that shows a strategic shift from a military focused provider to a broader market player. Okay, and the fact that it included civilian customers and other customers in other European countries suggests that we need to understand and adapt to various market conditions and consumer preferences and possibly competition in different regions, or that's what the company had to do in the 20s and 30s. That's relating to a pastel analysis. So they've gone from mainly working or exclusively working in Keyland, they've expanded into other European countries, and that would have required a need to understand and adapt. And finally, the fact that it's known for its high quality and stylish saddles, that suggests a competitive advantage, okay, in the market. And that's likely going to influence things like customer loyalty, their pricing power, and also their market positioning. Probably can charge a little bit more because of that high quality and that brand reputation.
Next up, we've got a clip from our strategic analysis. It's extremely important that you have the ability to identify how the pre-scene relates to key models and theory from E3, F3, and P3. And the examiners will expect students to demonstrate a good understanding of the models and theories and make the appropriate links to the case study during the exam. It can be hard to fully analyze a company using models you've only recently learned and be confident that you've got it right. So our strategic analysis has done that hard work for you. So in this clip, we're going to take a look at our strategic analysis video.
So there we go. That's what we're going to do. We might as well just crack on with it. So we start by looking at where the organization is heading, getting an idea of where it wants to be in the future. The first thing we'll look at then is the mission. And there's 4 aspects to this. There's the purpose. So why does the organization exist? For whom does it exist? And what does the organization hope to achieve in the long term? We've got the actual strategy. So these aren't explicitly stated in the pre-scene, but we can infer these from reading the pre-scene. So how does the organization compete? What are the range of businesses it's operating within? Can we infer any company values? What do they stand for? What's important to them? And finally, what are the policies that ensure people act in accordance with value, strategy, and purpose? So starting with the purpose, Kanann's core purpose is to design, manufacture and sell high quality traditional saddles for horse riding with a focus on general purpose products rather than specialist items. The company aims to support equestrian activities by providing durable, comfortable saddles that enhance the riding experience for both the horse and the rider. They have a commitment to tradition and quality, and these underpin its mission to maintain and nurture the craft of saddle making while meeting the needs of its customers. Now moving on to strategy then, the company's strategy appears to focus on sustaining its legacy through craftsmanship and quality.
Now, the company emphasizes the importance of handcrafted products, and so this suggests a strategy that values artisanship over mass production. And despite facing a dynamic market, the company actually adheres to a traditional approach to design, and it's been fairly cautious about diversifying its product range or adopting new technologies. But the involvement of the next generation in the family, Freya, that does indicate a potential openness to infusing new ideas and possibly revisiting its strategic direction to better align with current market trends and customer preferences. So as for the company values then, we know their values seem to be deeply rooted in tradition, in quality and family legacy. They've got respect for craftsmanship, attention to detail, and a commitment to using quality materials that are central to the company's operational ethos. The family-oriented leadership that underscores a value system that cherishes things like heritage and continuity, and that would suggest a business model that prioritizes long-term sustainability over short-term gains. And the emphasis on sustainable sourcing, sustainable production processes, and maintaining strong relationships with suppliers and customers, that does reflect its values of responsibility and integrity. And then finally, for policies, the policies, although there aren't any specifically mentioned, there are some hinted at, and they demonstrate a commitment to sustainable practices and quality assurance. So, for instance, the company's insistence on sourcing wood from sustainable forests for saddle trees, and buying those saddle makers, that reflects an environmental consciousness. Its policies or probable policies around production emphasize maintaining high quality standards with meticulous stages in the saddle making process that ensure product excellence. And in terms of sales, Kanann opts for a distribution model that relies on established relationships with wholesalers and retailers, and that emphasizes trust and reliability. And then financially, the company exhibits prudence through careful budgeting and a fairly conservative approach to investments and financial risk taking. Okay, so that is an idea of the company's mission, and that gives us an idea of where the company wants to head on its own terms, and what it's got in mind for its purpose and strategy and how it sees itself going forward. Now, from the pre-scene, we might interpret the fact that we seem to be in a period of transition, and we're moving from, and the company's aware that it's perhaps slightly fallen behind the times and there is a need for new strategic ideas. So I would expect that to be the context for the exam. So next up, we have objectives and performance measurement. And this is all about having goals, really, and objectives that can be measured, that give the company a focused target to move towards. And these can help with staff motivation, and importantly, it enables for performance measurement. So seeing if you're actually achieving your targets by measuring your progress towards them. So there's a range of different things that could be monitored. And so what we've got here, a list of the things that we may interpret. So there's no specific targets or performance measures specifically stated, but we can infer several that the company likely monitors based on the context and industry practices. So first of all, revenue growth is probably something they measure. They would probably want to aim for year-on-year growth in revenue. Okay, so we've seen not so much growth. It's around about 3% for the year, but that's something they're probably aware of. Another one will be gross profit margin. They're going to target maintaining or improving its gross profit margin. And that's a critical measure of pricing strategy and effectiveness and cost management efficiency. Now, we saw gross margin actually go down in the financial statements, but we know that they've calculated gross margin for all their budgets as well. So this is something that they're monitoring, although there may be some concerns around performance measurement given that that's actually gotten worse over the past 12 months. Similarly, with the net profit margin, this is an ultimate indicator of profitability. And so Kanann would focus on maintaining a healthy bottom line after accounting for all expenses. Again, we've seen that decrease. So while the measure is good, the actual performance is questionable. Another one might be working capital efficiency. given the detailed breakdown in working capital components, the importance to F1 as well. Measures like the working capital cycle, inventory days, receivables days, payables days, etc. These are all important indicators of managing liquidity and efficiency in the company. We might also have measures for production efficiency, so the total production and packing time for saddles and the efficiency across different production stages. Those are going to be important, particularly as we've got a labour-intensive manufacturing process here. Also, quality control could be important here. Company known for their high-quality products, so things like the rate of returns or customer complaints could be an essential measure of performance. Some others, inventory turnover. So given the significance or the significant role of inventory in operations and the high value inventory that we're dealing with, these saddles range in price from sort of 2,000 to 4,500 to selling price, and the cost is also fairly high. So monitoring the turnover of inventory and how quickly these are sold and replaced over a period. Market share is probably something that would be important to measure. Although the company does have a relatively small market share, we did have information on the kind of share of the home market and different geographical regions as well. So, understanding market share and likely wanting to increase its presence both domestically and internationally. Customer satisfaction. That's important for a company that values tradition and quality. So customer feedback and satisfaction rates are going to be important for ensuring product alignment with market needs and maintaining their brand reputation. And while we're mentioning that brand recognition, given the competitive nature of the market and the challenges in innovation, the company probably measures its brand recognition and perception, or if it doesn't, this is a good thing to measure, particularly against more innovative competitors. Another thing would be employee retention and satisfaction. So we've got a family-owned business, significant emphasis on tradition and craftsmanship. So employee retention rates and satisfaction could be vital metrics, and that reflects a company culture and the operational stability. Also, the fact that we need skilled craftsmen here, or craftspeople, to make the saddles. And then finally, another one might be leadership effectiveness. So obviously a family business, we've got the Kanann family, but particularly with the new generations like Freya stepping in, that suggests leadership effectiveness in driving innovation while preserving core values could be a key performance area. So by monitoring these kind of inferred targets and performance measures, we can better understand the company's operational strengths and weaknesses, financial health, market position, internal culture, and guiding strategic decisions and improvements. Okay, so a whole range of different things there of potential performance measures related to objectives.
We're casting the net a little bit wider now with a look at the wider industry in which the Pre-Scene company operates with our industry analysis video. It is critical to demonstrate to the examiner that you have fully understood the Pre-Scene industry as a key element to gaining extra high marks in your case study exam. Researching the industry can be a laborious process, especially when you're not sure which information is useful and which isn't. And our team has spent hours doing this research for you, finding the information that will help you to achieve a wider perspective of the industry and build a deeper knowledge in preparation for your exam. So in this next clip, we'll be taking a look at our industry analysis video.
So starting off with an introduction to the saddle industry and a brief history of the saddle. And essentially it's closely tied to the history of domesticated riding animals, especially horses, which is something that I think we all know. Now, the earliest known examples were discovered in ancient civilizations, and it's really developed over time from the medieval period to the Renaissance to modern times. Now, the key point I think we should take from here is that the saddle making is a blend of tradition and innovation, and this is going to be a really key focus throughout the industry analysis, with manufacturers using a variety of materials ranging from traditional leather to modern synthetics. So this idea of incorporating what is really a timeless and old tradition with new developments. So it involves both handcrafting and machine manufacturing, with a strong emphasis on customization to meet the specific needs of the individual riders and their discipline. Now, the globalization of trade and advancements has meant that there's a really wide variety of saddle styles and production techniques available across the world. And this reflects the diverse needs and preferences of riders across different cultures and equestrian disciplines. So there's lots of different market segments that you could be going into in this industry. So let's take a look at the industry lifestyle. So when it comes to the horse industry, its life cycle has evolved significantly over the years, and it reflects broader trends in technology, consumer preferences, and the equine industry at large. Now, as we know, saddles date back to the millennia, and it had its growth phase particularly in the Industrial Revolution and the subsequent technological advancements that facilitated mass production, like most products. Now, it hit its maturity phase by the 20th century. It had become a well-established industry. Now, crucially, currently, the phase that we're in is that it's distinguished by a blend of time-honoured methods and contemporary advancements. Like I said, this blend of tradition and modern is a really key theme in this industry analysis. And we have the adoption of advanced materials like carbon fibre that is going to really innovate the industry. So what does this mean for Kanann? Well, Kanann is established in 1906, which means it's positioned as an experienced entity in the saddle industry, and it leverages over a century of operation to build a really reputable brand known for its quality and traditional craftsmanship. And really, this longevity places amongst the established players rather than newcomers, and it's got a deep-rooted understanding. Now, the firm's legacy and focus on traditional production has fostered brand loyalty and facilitated a stable market presence within a niche catering to primarily amateur equestrians. However, this traditionalism potentially caps Kanann's market penetration and growth, and the company's reluctance to innovate could really deter it from a broader demographic. Now, this is really key. So, its market share in Keeneland, while rooted in flourishing equestrian market, as we can tell, remains small. So what ways can we really engage this market and increase its market share? That's going to be the key question here. So like I've just said, there's an opportunity for growth and expansion, and we really need to be capping into that. So there's lots of different marketing strategies that could propel Kanann to the front, and we'll be taking a look at those later on. Next, let's take a look at the product. So we have obviously the saddle. The main components are the tree, which gives it the foundational structure, the seat, the pommel, the cantle, the flaps, and the stirrups, and you can go into more detail reading that. Now, crucially about the saddle is the design consideration. So the saddle design must ensure proper weight distribution, and it prevents pressure points and potential injury to the horse. So it's really important these are high quality, and it's why customization is so popular, to ensure that the proper weight distribution with the unique size of each rider and their horse. So that's why customization is a particularly big theme and trend, as we'll go into for this industry analysis. Now, there's also different types of saddles. So you have Western, English, dressage, jumping, and endurance. And as I said, there's lots of different market segmentations within the saddle industry because there's so many different sports and activities within this. Now, crucially, there are lots of different new products and innovations within the industry. So we have high-tech materials like carbon fibre is increasingly being used, and we also have synthetic materials that go beyond carbon fibre. And these materials can offer greater flexibility, durability, and resistance. And crucially, they're not made of leather, which makes them vegan, which As we know, environmentalism is on the rise for all industries, and every industry needs to be taking care of eco-friendly methods. So this is another big theme that we're going to come across. So synthetic materials are actually better with flexibility, like I said, durability and resistance to weather conditions compared to traditional leather. So they actually have additional benefits other than just being tailored to consumer trends, such as the lean towards veganism and environmentalism. Another big one is also automated production techniques. So while the art of saddle making has traditionally been quite labour intensive, there's a trend towards incorporating more automation in processes such as leather cutting. And this can really, as we know, with all automations, can increase efficiency, reduce production cost, and standardise quality. And like I've said earlier, customization and personalization and tailoring to specific needs of riders and the horses is a really big trend, and sustainability, as I've mentioned as well. So sourcing materials responsibly and having eco-friendly alternatives is really important as well. So in tandem with these, we have research and development endeavours. So like we've said, we've got material innovation, so looking at bio-based materials and advanced synthetics. Ergonomic design, so ensuring we're reducing injury risk to the horse and rider. And we also have customization technology, so advancement in 3D printing. It could be huge in really tailoring the specifications of the saddle to that individual person. We also have smart saddles, so they're a bit like a smart watch but a smart saddle, so you get real-time feedback on horse health, rider posture and performance, etc. And like we said, sustainability practice and advanced production techniques, so automation in areas beyond cutting such as stitching or leather treatment. Now, some direct competitors, I'll name a few here. So we have Textan, and this is a renowned manufacturer of saddles and leather goods, particularly known for its Western saddles. And then we have companies such as Stubborn, which we are going to look into greater depth later on. And they offer a range of saddles for various disciplines known for their durability and comfort. So that's just a couple competitors there. And like I said, we'll go into further depth into the competitors later on in the video. Now, what does this mean for Kanann? Well, as we've said, Kanann's adherence to conventional design limits its appeal in an industry leaning towards specialization and innovation. So really integrating advancement without diluting its legacy, that's really crucial. And perhaps embracing new materials or automated production elements could really rejuvenate its product line. And investing in research and development could really propel Kanann to the front, and essentially embracing change and innovation could redefine its market position, so it could gain a greater market share. Now it's in a smaller market share, tailoring to more amateur riders, whereas if it could redefine its market position and become a contemporary leader, it could really secure a larger segment of the dynamically evolving industry. So here we have smart saddles and 3D scanning. So our example is smart saddles are an award-winning competitor in the UK and have been used to develop saddles to flex with the movement of the horse's back to allow unrestricted movement during exercise. So this is also accompanied by advancements in 3D scanning and modelling technology, which has made it easy to create custom-fit saddles. Now, additionally, some manufacturers have added sensors and connectivity features that can track horse movement, saddle fit, rider position, and provide data for training and performance analysis. Now, currently, Kanann provides only traditional saddles. So if we were going to look at this example within our exam, we might say something like this. Smart saddles are an industry trend developed to improve the health and safety for both rider and horse, and to provide data for tracking and performance analysis. Kanann only provides traditional saddles. Investing in research and development of smart saddles and 3D scanning, modelling, and using Freya Kanann as an ambassador for this performance range would allow Kanann to enter a new market segment, and so could increase Kanann's market share and profitability.
The next clip is taken from one of our most popular videos, the Top 10 Issues. The Top 10 Issues video identifies the 10 most likely issues to appear in the exam based on our expertise and experience in this area. and our SCS expert gives guidance on how to deal with the issues in your answers, provides advice on which models to use, and key points that you should raise. Based on our experience of analysing CIMA case studies for over 10 years, our predictions have been extremely accurate in previous exams, with around 70 to 80% of topics in the real exams being covered in our top 10 lists. So take a look now at this clip from our top 10 issues video.
Okay, so introductions out the way, let's get on with the video. Now, these 10 issues aren't in any particular order. Issue number 1 isn't any more likely than issue number 10. We're just going through them as we have them. So the first one we're going to look at, number 10, is financial reporting. The basis of choice here, firstly, it's obviously a key F1 syllabus area. It's a big part of the F1 syllabus, and it's pretty much always examined. You'd really struggle to look through past papers and find a variant that didn't have some sort of application of financial reporting standards. So the issues based on looking at the pre-scene and the company we have here would be something like an asset purchase or disposal, whether that's property, plant or equipment. Could be some machinery upgrades. Obviously we're dealing with a manufacturing company here, so or whether that's upgrading machinery, introducing more automation and something along those lines. These are like strategic goals for the company, and so assets and purchasing assets, updating assets might be part of that strategy. Leasing machinery could come into it. That might be a viable option for a company who's looking to expand or open a new production line, and rather than buying the machinery, they want to lease it. Well, obviously the IFRS 16 leases is in F1. I've seen that come up in many past exams as well. So the company doesn't currently have any leased machinery. We know that because it's not in the financial statements. Leases would show up as right of use asset and lease liability in the balance sheet. The fact that we don't have that means there's no leases currently in place, but there's nothing to say that they couldn't take out leases on property, plant and equipment. There could be asset revaluation. There could be inventory valuation, perhaps valuing new products, or it could be revaluing old stock or obsolete stock or something that's been damaged. And then there could be the impact of tax on financial statements. So it's, rather than going through the specifics of tax, it would be what the impact from a tax perspective might be on something such as capital allowances, or tax depreciation, or carrying forward losses, or anything like that, what the overall impact would be on a company's financial statements. So the key points to raise, obviously it's going to depend on the particular standard, but in most cases, most of those situations, whether it's disposals or inventory, whatever, there is a particular accounting standard that needs to be applied for all of those. So your job will be to apply that accounting standard, whether that's the IAS or the IFRS. And depending on what the question asks you to do, usually that's what it will be. So it could be a straightforward apply the basics of the standard, or it could be a more fringe case and you've got to maybe interpret it or apply it in an unusual situation. Note the impact on the financial statements of applying that. So what's going to be the impact on revenue, on profits, on the balance sheet, and make sure you get your debits and credits right. So you talk about, we need to debit this account or credit this account. You've got to make sure they balance. Follow the rules of double entry bookkeeping. Both sides are accounted for. You can use your dead click to remember. Obviously, you debit your increase in equity assets and drawings. You credit your increase in liability, income, and capital accounts. Relevant theory. So if you're going back to F1 to study this, you want IAS 16, property, plant, and equipment. All of that, right through from the sort of initial recognition and initial measurement, subsequent measurement, depreciation, revaluation, all of that stuff. IFRS 5, that might be for disposals or it might be for discontinued operations. IFRS 16 for leases, as I've mentioned. IAS 2, inventory, capital allowances on assets for tax. We're given some pre-scene information with details about that and how to apply that. Another one is events after the reporting period, and in that case, it's a case of deciding or determining whether the event is an adjusting or a non-adjusting event. So there's our first issue then, financial reporting. Next issue then, number 9, is variance analysis, and the basis of choice here is that it is frequently examined, perhaps one of the most frequently examined topics. It comes up in pretty much every variant now that I think of it, and that's because it's a very important P1 topic, and it's quite easy to come up with variance analysis questions in the exam. And we've got all that budget information in the pre-scene as well, haven't we? So a nice easy exam for the examiners to write, a nice part of P1 to examine. So certainly an area that you need to be prepared for. So the likely issues, the key areas, the variances will be basically some sort of variance has occurred, and the reference material might give you details of those variances, and you need to do the analysis. So whether that's sales variances or material variances, labour or fixed overhead variances, those tend to be the categories. It'll be your job to look a little bit deeper and look at the reasons for these variances and analyse them and give reasons as to why. So the key points to raise would be exactly that. So first of all, a bit of an explanation on how the variance would be calculated. Drawing conclusions about it as well. So whether it's a favourable or an adverse variance, what that means, reasons, the underlying reasons for those variances. Is it an increase in the cost of raw materials? Was there inefficient labour practices? Were overheads absorbed an unexpected way? So whatever the reasons, need to explain what they are and how that relates to the variance, why that's caused the variance. Some wider points as well. We can talk about the accuracy of budgets and whether, in fact, even though if there is variance, it might actually be that, variances do happen. There is always a level of unpredictability in manufacturing. So it might be that the budgets themselves are the underlying problem, and that the approach to budgeting is faulty and it needs review, or it's too infrequent, or an incremental approach isn't appropriate for the type of company. And then the limitations of variance analysis as well might come up if you're specifically asked to do that, or that might be just something to keep in mind as you're doing the analysis, and mention the ways that obviously it's very useful, but the limitations of the analysis. So the theory here, relevant theories from P1, and you want to go back to those variance sections if it's been a while since you did those. So material price and usage variances, labour rate and efficiency variances, fixed overhead expenditure, volume, capacity and efficiency, sales price and volume variances. So these are all the ones from the P1 syllabus. You might want to just double check the forecasting parts of the syllabus as well. But this is like the F1, like the financial statements one, or the financial reporting one that we just looked at. This is one that you see come up again and again. So if you're not prepared for this, if you haven't revised variances, you're going to put yourself in a tricky position, because we see this come up a lot.
Our final clip is from our mini mock debrief video. We produce a range of mock exams for each sitting, and alongside each of those mocks is a video debrief. And in these debrief videos, our experienced tutor analyzes every question and takes you through a step-by-step guide on the best way to approach them. And by watching debrief videos, you'll learn to understand how to pick out all of the key information in the task and the requirements. You'll use that information to build an effective plan. Many students fail due to poor answer planning. And then that will help you to formulate an excellent answer. So in our sample video, we'll take you through question 1 of the mini mock.
So here we go then. First of all, we've got task 1. This is our unseen material, and it's 45 minutes in length. So this is the usual length for a task in the OCS exam. It's just in the full exam or in the mock exams, you'll have 4 tasks. Whereas, because, as I said, this is a mini mock, so we've just got 2 tasks. It's just to give you an idea, a flavour of how the exam works. So we've got 45 minutes here. And the first thing we usually do, before we read too much of the email and the information we get, we have a look at the percentages. And we get a breakdown of percentage for subtask A, B, and C. And these percentages indicate how much time you should be spending on that overall. Notice here we've got 32%, 36%, and 32%. So it's close to a third for each subtask. A and C slightly less. So overall, if we take that 45 minutes, the first thing we need to do is divide that up by the percentages. We don't need to be too exact here. So what I would do is split that into a third. 45 divides quite nicely into 3 lots of 15 minutes. So we're going to say 15 minutes on each of these. And for task C as well. And remembering our rule for how many marks per minute, we're looking at around 2 minutes per mark, aren't we? So if we divide this by 2, we're going to get about 7.5. So we're looking at 7 to 8 marks for each of these subtasks. Now the 32% one's slightly less than the 36. So let's go ahead and say we're looking at 8 marks for this one, 9 marks for this one, because roughly speaking, 3% is close to a mark, and that's what the difference is. And then 8 marks for this one. Okay, so in total, that's 25 marks. And we've got the 3 subtasks to earn all of those marks. And again, that's usual for a full mock as it is for the mini mock. A task that's worth 45 minutes, well, that's a quarter of your total time in the full exam, half in this exam. But in the full exam, there are 100 marks available, so a quarter of your time, a quarter of the marks would be 25 marks. So we want to get as many of those 25 marks as we can. And we're already starting to get a structure. We know how to allocate our time to make sure we are doing that. Obviously, lots of students who are unprepared for this exam go into it. They start writing for subtask A straight away without any thought of how much time they need to spend on B and C. And they might spend half an hour on subtask A and they're only giving themselves, 15 minutes to do these two. And these two added up together, it's over nearly 70% of the marks available. So we want to make sure that we know what we need to do for the exam. Now we can start reading through the material. So you come into work and switch on your computer and we get the following email. So the things to note is for who it's from. Typically, you're going to have emails from your manager, who's Lois Gamel, who is the finance and HR manager. Just they sign off there. So we should know that anyway from the pre-scene analysis. So Lois is the in charge and responsible for the finance team in the company. And the subject here is budgeting and the Meland project. So I've been looking into our budgeting approach following a recent management meeting about the discrepancies between our actual and budgeted figures. So we've got an issue here between actual and budgeted figures. So there might be some question marks over the accuracy and suitability of the current budgeting system. Just as a quick note, we should know from the pre-scene as well, the current budgeting approach is that we use incremental budgeting, which is where you take the previous year's budget and make some adjustments based on that. So we've got some discrepancies, which means perhaps this budget approach isn't working, or how we're putting our budget together doesn't quite work. So we've had discrepancies over the last 2 years. See reference material. Now the reference material, as always, is included. You get a bit of reference material with every task, and that reference material will give us a breakdown of those discrepancies between actual and budgeted figures. We've been using the same budgeting approach for years, although the company has been through some operational changes in that time. So the question is whether the same budgeting approach is still appropriate given the company has changed. So I'm reviewing our current budgeting approach to assess whether it is our best option going forward. So this is what you might call the preamble or the context. We're learning a bit about what the sort of background issue is. And the background issue is we've got some discrepancies between actual and budgeted figures, and the finance manager is questioning our budgeting approach because of it. So what we need to do, first of all, we need to write a report that covers, or what we're going to do is to assess the advantages and disadvantages of adopting a participative approach to budgeting at Kanann and explain whether or not it would be suitable. So first of all, if we just break this down, we've kind of got three smaller sections. So first of all, the first thing we need to do is talk about the advantages of a participative approach. Perhaps actually the first thing we need to do is give a very brief explanation of what a participative approach, just a few lines. And then we talk about the advantages. We're going to talk about the disadvantages. And then finally, notice this and here, what we need to do is explain whether or not it would be suitable. So 3 stages here. And so in terms of our mark allocation, we know we've got 8 marks, roughly 8 marks. It could be 9 marks, 8 or 9 marks. So discussing the suitability, that might be sort of 2-3 marks if you've got a kind of in-depth explanation. And so we're probably looking at 3 to 4 advantages and disadvantages. And that gives us an idea of what we need to do to score all the marks available here. So we want 3 or 4 advantages, 3 or 4 disadvantages, explained and applied to the company for the participative approach. And then also in our conclusion, we want to talk about whether or not a participative approach would be suitable. Would it address the issues highlighted here about these discrepancies? Would it be appropriate given the structure of the company and the processes that we have, the manufacturing and how the company is structured? So that's going to be our first question. So what we want to just do then quickly before we move on is have a look at the reference material, because that always includes useful information. The reference material in this case is Kanann's budgeted versus actual figures, and this is just for the first quarter, so from January-March 2024. So that's quarter 1. Obviously this exam is being sat in May, so a few months has passed, but what we see then is we've got sales revenue, cost of sales and gross profit, and we've got the budgeted versus actual. So in all cases, we can see that the budgeted is coming, or the actual figures are coming in lower or worse than the sales revenue. So the revenue is coming in lower, which is not what you want. Cost of sales are coming in higher. Again, that's not what you want. And overall then, we can see that this impact on the gross profit margin is significantly lower. Not quite, but almost half. And so that's not what you want in your budgets. When you put together your budget, you don't want the reality to be so different that you know your profitability is almost reduced by half. We also have some points down here. As we know, the budgets are prepared annually on an incremental basis. Okay, so annually, that could be an issue as well. Whether that is that enough? Is that part of the problem? There's not enough flexibility. There's not enough reviewing of the budgets to incorporate changes in demand, changes in the price of raw materials, changes in the labor force, whatever it might be. Operational managers, we're told, have limited involvement in budget setting, and that's relevant because we're talking about participative budgeting approach here. And so a participative approach would have greater involvement from operational managers. You'd get their buy-in, they'd be more involved, they could bring their knowledge and expertise to it. But the fact that they have limited involvement suggests that participative budgeting would represent a fairly significant change in the budgeting process. As it is at the moment, what we have is Rena Gomez, who's the Deputy Managing Director. She sets all the budgets for all departments, so that's finance, production, sales, with the help from members of the finance team, of which we are a part, and has done since she's joined Kanann. So we've got high-level oversight here from Rena Gomez and a lot of central control, and operational managers have limited involvement. So we can see that actually a participative approach might have some benefits here because it would, it would overcome this limited involvement. It might help with motivation. It might help with more accurate budgeting. And it might be that Rena kind of sitting outside and setting the budgets might lack all the information required to put together accurate budgets. So it might overcome some of the problems. So these are some of the advantages. Of course, we need to think of disadvantages as well. So we know it's a fairly small company, and whether we want operational managers to be involved and the time it would be required for them to be involved in the negotiation process might not be actually worth the time, given the fairly small and simplistic manufacturing approach. So there we go. That's going to be our subtask A. Moving on to subtask B then. We have a new strategic goal of increasing global market share. So that's kind of the background here. Changing the company's strategy, and what they want to do is increase global market share. Again, we saw in the pre-scene, didn't we, that a lot of the company's revenue is coming from its domestic market. So they want to increase their revenues overseas and in foreign countries. One option being discussed is setting up and operating a production facility in Milan in Southeast Asia. So Southeast Asia is one of the places where we do currently have some presence. We do have some sales, but if we go back to the pie chart from the pre-scene, I think it was the smallest. It was around about 5% of sales coming from Southeast Asia. So they've identified a market where there might be some growth, and they want to target that market, a geographical region. And by setting up a production facility there, perhaps they're hoping to take advantage of local suppliers, working with local suppliers, local labor, and maybe cheaper production and easier distribution to that area in order to grow our brand in the region and take advantage of a growing market. But it's essential to be aware of the level of risk that expansion will pose to us and our operations, of course. So explain both risk appetite and risk tolerance. Those are two related but separate concepts, so both need to be explained, and apply these ideas to the risks we currently face in relation to international expansion. So again, if we just break this down, we're going to have a bit of an explanation of what risk appetite is, explanation of what risk tolerance is, and then apply these ideas to the risks we currently face. So in addition to explaining appetite and tolerance, we also need to apply that. So what is Kanann's risk appetite? What is their tolerance? And what does that mean for international expansion? So what might be some of the risks we face here? And what does the appetite and tolerance suggest about this expansion? So again, I think there's so we've got maybe a paragraph explaining appetite and tolerance, how that applies and fits into risk, assessing what the company's appetite and tolerance are, and then what that means for international expansion. Okay, so that's going to be subtask B. No reference material for that. And then finally, subtask C. So Milan has a number of key differences from Keyland. So Keyland we know is in Europe. Milan is in Southeast Asia. So there's going to be cultural differences, political differences, legal differences, economic differences, all the pastel differences. So setting up a production facility there will require the use of local labor and using local businesses as suppliers, potentially as customers, as distributors as well. So the labour laws in Milan do not protect workers to the extent that we are used to in Keyland. Keyland is in Europe, possibly in the EU. That's not mentioned in the pre-scene, but it could be. And obviously there's fairly modern employment protection and employment legislation and regulations that companies need to abide by. And that is what we're saying here, is that is not the same. That's not the same in Milan. Workers are not protected to the same extent. And so as a company that has a commitment to things like sustainability, and more broadly, I think what is being hinted at here is corporate social responsibility and ethics. Please can you describe the ethical issues to be considered as a result of working with local businesses and the underdeveloped employment legislation in MELAND. So again, what we're doing here, so we want to talk about, first of all, the background here is that we're talking about ethical issues. So the things we want to talk about, the impact with regards to employment. So what are the things that might be related to that? So we might talk about wages. We might talk about sort of contracts, 0-hour contracts versus full-time employment. We might talk about health and safety and how all those things affect employment and the fact that we have underdeveloped employment legislation. Remember, we're not talking about how this can keep our costs down and how this is a great opportunity. That's to be, the what am I saying? The background here is an ethical stance. So you want to take an ethical stance on this, thinking about ethics and corporate social responsibility. We want to talk about not exploiting workers, and what the ethical thing to do is. You might want to mention, obviously, from a pure financial perspective, what the implications are, but that shouldn't really be the focus. So that's just one aspect. So that could be sort of what we talk about first. And then another thing we want to talk about here are the working with local businesses. So suppliers and customers, and how they might be different. Okay, so how dealing with them and how they treat their staff, their customs and what they're used to, and kind of an overall consideration of our supply chain and sustainability and corporate social responsibility. So I think plenty of things to discuss here in relation to the differences and what the environment that we're used to versus the environment we might be operating in, and the things we might need to look out for. You might want to refer to some aspects of PESTLE here. So political might be relevant, economic, social, technological, perhaps not so relevant, environmental, not so relevant, legal, probably is relevant. So of the PESTLE, I guess you want the P, the E, maybe the S and the L. Could help you in structuring your answer here. Of course, you don't need to use any particular model, but it's good. It could give you more depth to your answer. So there we go then. There is our sort of analysis and breakdown of the first task.
So there we have it, 5 key videos to get you started with your exam preparation. I hope you found them useful, but the reality is that this is just the starting point, and you'll need to do a lot more preparation over the next few weeks to improve your chances of passing this tricky exam. And to that end, we have a number of options available. The video clips you've just seen are taken from our course content. And our courses are designed to help you ultimately pass the exam. We want to minimize your study time. And of course, we want to ensure that you're getting your value for your money. So if you want more of what you saw today, you want to check out our full pre-scene analysis pack. And that basically includes the full videos from which those clips were taken, from the pre-scene analysis videos through to the top 10 analysis, the strategic analysis, industry analysis, and in addition to that, we've also got 30 pre-scene questions that are designed to help you consolidate your knowledge and understanding of the pre-scene company. Pre-scene analysis is a crucial first step, but passing the SCS exam requires developing your exam technique and lots of practice. So the best all-round comprehensive solution is the Astranti Premium SCS course. On that, in addition to everything you get in the pre-scene analysis pack, you'll also get 5 mock exams. And those mock exams are written according to the pre-scene company. They're not generic and they don't have generic solutions. They're applied to the pre-scene and they're based on the top 10 issues. So you'll get questions in the mock exam that they'll have a good chance of coming up in the real exam. In addition to those mock exams, you can get mock marking and feedback. And this is where you'll submit a mock exam to your dedicated marker, and they will mark that and give you a fully annotated script with feedback and annotations. And they also provide a 9-page document with feedback that you can apply in your next mock. In addition to that, we've got our exam technique video series. Exam technique is really important in this exam. And so our exam technique video series has 13 chapter study texts and accompanying videos taking you through every aspect of exam technique, right from understanding the exam through to interpreting the requirements, answer planning, writing technique, and time management. Really valuable course that will help you a lot developing those soft skills that you need to do well in this exam. Alongside that, we have 3 live masterclasses that run throughout the course, from the first one that's looking at the pre-scene through to later ones that look more at exam technique and theory revision to help you get ready. Included in the premium, you get access to tutor and mentor support, and you'll be able to access our discussion hub where you can post your questions and talk with other students and tutors about any questions and queries you may have. And our premium course comes with our double pass guarantee, and that's exclusive to premium course students. It's a double guarantee because if you don't pass, if you take this course and you don't pass the exam, we'll give it you again for free with no extra charge. And you also have a 14-day money-back guarantee. So if after 14 days on the course you're not happy, you can get a refund, no questions asked. So whatever your situation, we believe we have the solution for you at Astranti, and you can find out more at astranti.com/CIMA. Thanks for watching.